It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
As chairman and CEO of the USA's largest bank, JP Chase, Jaime Dimon and his massive commercial bank have admitted to an unprecedented 5 criminal felony counts since 2014, having also been put on criminal probation 3 times over. Those 5 felonies are more than the bank pleaded guilty to in its prior 100 years of existence. In other words, using a large swath of unsecured U.S. citizens' savings to better rig markets while paying paltry fines and arrears. That appears to be the bank's running business model. If there were a legitimate justice inside of this seemingly endless financial bubble after financial bubble economy, Jaime Dimon would have likely lost his job long ago and possibly be residing in a federal prison at the moment. Instead, Jaime Dimon and his cohorts often have better real-time, economically sensitive information and data, able often to see ahead of even the New York Federal Reserve's trading desk, with certainly more detailed real-time data than the governors at the Fiat Federal Reserve are exposed to.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
But it wasn't just the president who got it wrong a year or so ago. I want to play for you what you said about inflation last year. Listen to this.
Is there a risk of inflation? I think there's a small risk, and I think it's manageable. I don't anticipate that inflation is going to be a problem, but it is something that we're watching very carefully.
Was it a mistake, Madam Secretary, to downplay this inflation risk? Did that contribute to the problems we're all seeing right now?
Well, look, I think I was wrong then about the path that inflation would take.
In order to retain a shred of credibility, the current US Treasury and former Fiat Federal Reserve head, Janet Yellen, admitted this week she was either incompetent or, more likely, she simply gaslit the American people about massive inflation they're now suffering under. Oops, here she comes with more gaslighting by using scapegoat secondary reasons for why we have massive secular price inflation now compounding year after year.
As I mentioned, there have been unanticipated and large shocks to the economy that have boosted energy and food prices and supply bottlenecks that have affected our economy badly that I, at the time, didn't fully understand.
The still dominant fiat currency of the world blew out one of its largest supply measurements, M2 that you see here, by over 45% in a relatively short duration of time, less than 3 years. Escalating prices are the inevitable result of such irresponsible actions, and no matter what pandemic lockdowns or wars which have come about since, prices were headed higher regardless when you create this much fiat currency. In the August 2019 Go Direct document presented at Jackson Hole Central Banker Symposium, the Fiat Federal Reserve, the Bank of Japan, the Bank of England, and the European Central Bank all agreed upon rapidly expanding their fiat currency supplies to help further spur increased price inflation moving forward. And judging by available data on the world's fiat currency supply measurements, that's exactly what they did. Within that Go Direct document, it stated point blank, the boost to the supply and/or stockpile of the fiat currency has to be permanent. In other words, try and take away all the currency creation they've just done, and a deflationary collapse will be next to follow. It also went on to describe that their upcoming actions were going to be helicopter money delivered in sufficient size to drive up inflation, knowing point blank then the growth of the currency supply ultimately drives price inflation.
What do you think when you see what's happening with the markets, what the Fed is talking about doing, what the Biden administration announced yesterday?
Well, when you run boom and bust monetary policy, you end up with boom and bust markets and a boom and bust economy. So I don't think any of us should be terribly surprised by what's happening. I was sort of comforted, to be honest, to see the president, the Treasury Secretary, and the Fed chair in one room together. There's been a whole lot of blame game. Whose fault is this? Well, it's the fault of people in that room. And you know my view, which is the real economy will be what it'll be, but the Fed is in the business of establishing prices. The Fed gets to choose what's the inflation rate, and I don't take any comfort in saying it, they chose wrong. That's why we're having this massive cost of living squeeze that's hurting the entire country. Imagine, Becky, if the Fed had acted as leisurely in the 2008 crisis and the 2020 crisis as they're acting now. Where would the markets be then? Where would the economy be then? So I must say I'm a little bit puzzled to understand why they've been so slow to recognize this inflation crisis and so slow to do anything about it.
So 50 basis points, 50 basis points, 50 basis points is not enough to catch up at this point.
So I think they should get out of that business. I think they should. They changed regimes, which is what caused this inflation crisis. In August 2020, they adopted a brand new pro-inflationary bias.
Former Fed governor and likely one with ambitions of one day returning to perhaps chair the United States Fiat Central Bank, Kevin Warsh went on CNBC this week, admitting where much of the current price inflation escalation policy began from. Problem is, he misspoke about the date. And of course, these supposed financial journalists did not bother to rebuke him. Instead, they went right along listening to something they probably didn't even have a clue occurred. Again, a half year this occurred before rolling pandemic lockdowns in 2020. It also occurred a month before the overnight New York Fed repo loan fiasco kicked off. The date to burn into your mind was August 2019.
They adopted a brand new pro-inflationary bias. We had already had inflation in asset prices. They announced that new regime in Jackson Hole. We then have a surge in prices in goods and now services.
What I worry about is the credit card debt numbers up 21% year over year. And I know the consumer is strong. We keep hearing that. But I wonder, is the consumer strong because it's kind of a frenzy of spending on revolving debt? That they're not spending the cash, they're spending debt that's going to have to be repaid back. Gallup yesterday came out with their economic confidence index. It was down again, and it's the lowest reading since 2009. So I'm confused. The consumer's strong, but the consumer confidence measured by Gallup is at the lowest since 2009. It doesn't square up.
Yeah, so 3/4 of our fellow Americans believe that the economy and the country are on the wrong track. Anytime we've had any numbers approaching that, you had a recession right on your heels, usually a recession caused by a policy error. And to your point, we've just seen a big policy error. So for consumers, I think you're right, Brian. I think the surge in services, getting out and living a little bit, is making consumer spending look better than the underlying reality. For consumers, my old sort of framework is it takes the means to spend, the ways to spend, and the will. And we're seeing the means because salaries are moving up, but they're still falling behind prices. We're seeing the ways because now people want to go in hotels and get on airplanes. But what about the will? I think we should be very concerned that the will to spend isn't what these big cash balances would suggest. And by the time we get to the fourth quarter of this year and early next year, wouldn't it all surprise me if consumer sentiment now isn't telling us a story about where the economy is then?
Meaning that it's a self-fulfilling prophecy almost, like once consumers and businesses think a recession is coming, they're going to act accordingly, and that brings the recession on even faster?
So I think that's true, but I think inflation's eating the real economy. Inflation is eating up this excess savings. It's causing this excess savings to be precautionary. People are smart, not stupid, about their own financial well-being. Every day they see that they're falling behind, that wages aren't moving up fast enough. And I think what we've really got is a new period of price instability. And that period of price instability makes households pull back, businesses pull back, and we're asking for trouble by running this sort of policy.
Hello there. On behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible Bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Munster box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. The silver and gold markets traded slightly down overall for the week. The silver spot price finishes just over 22 per troy ounce ask price. The gold spot price closes just under $18.60 an ounce ask. The gold-silver ratio ticked back up to 84. The U.S. Mint continues its torrid pace of gold bullion coin sales, selling almost 199,000 ounces for last month, May 2022. Just over 6 metric tons of gold going to private investors may not sound like much, but on a historical basis, the U.S. Mint is still on pace to break last year's record high sales in gold bullion coins, likely to sell over $3 billion notional in gold coinage at this pace. Meanwhile, much thanks to bloated price premiums, limited blank availability, and a small available supply, the U.S. Mint's American Silver Eagle coin program strolls along with its sales numbers. Much of this is in part thanks to amending the original 1986 law in the 2010 Dodd-Frank Act, basically making it that the US Treasury head Janet Yellen's privy to decide if there are enough Silver Eagle coins being made to meet ongoing public demand. The charge used to be that they had to create enough to meet public demand ongoing. Based on 2022 first quarter data coming out of the Royal Canadian Mint, it would not surprise me at all to see the Royal Canadian Mint Silver Maple Leaf coin capture the coveted #1 position of most sold silver bullion coin in the world this year, 2022. The Silver Institute pounded the newswires this week, citing that physical demand for silver will hit a new record high this year, estimating over 1 billion and 100 million ounces of silver will be used between persistently higher industrial and investment bullion demand. The Reddit Wall Street Silver Squeeze crowd celebrated seeing COMEX silver registered ounces again fall to their lowest level since the movement began in February 2021. For perspective, 72.5 million ounces in the registered pile is just over 1.5 billion notional fiat Fed notes in purchasing power. It's next to nothing in a world with now nearly 100 trillion in fiat currency supplies sloshing around. In alleged fraud prosecution news, the U.S. Justice Department announced its first NFT, or Digital Asset Insider Trading Scheme prosecution. Damian Williams, a former product manager at OpenSea, is now facing 20 years in federal prison for allegedly using an age-old scheme committing insider trading by using his knowledge of confidential information to purchase dozens of NFTs in advance of them being featured on OpenSea's homepage. It's alleged that from or at about June 2021 to at least in or around September 2021, Christian used OpenSea's confidential business information about what NFTs were going to be featured on its homepage to secretly purchase dozens of NFTs shortly before they were featured. After those NFTs were featured on OpenSea, Christian sold them at profits of 2 to 5 times his initial purchase price. To conceal the fraud, Christian conducted these purchases and sales using anonymous digital currency wallets and anonymous accounts at OpenSea. After being asleep at the wheel for the last dozen years or so, it appears the SEC, or the Securities and Exchange Commission, is now trying to get serious in regulating the Wild West of financial bubble speculation, recently backfiring on naive investors. While the following clips are sardonic and darkly humorous, it's both sad and shameful it took them this long to do their job.
Welcome back, Brad. It's your investment.
I'll take meme stocks. Invest!
Ouch. Your investment, Julie.
I'm gonna do some research first.
Well played, Julie. Well played.
You can do research?
I'll take celebrity endorsements.
You should buy crypto. Trust me, I'm an actor.
I'm in!
Investing is not a game, so be careful where you get your advice.
I'll take guaranteed returns for $10,000.
Can't beat that.
Easy money.
Investing is not a game. All investments have risk.
I'll buy stocks on margin. I don't even know what that is.
Sure sounds fancy.
Invest!
Investing is not a game. Borrowing money to invest can be very risky. Learn more at investor.gov. Before you invest, investor.gov.
As the summer begins for most of you viewers out there, perhaps market volatility will slow for a short respite. Take advantage of the seemingly calm conditions while they last for now, because once the next recessionary financial storm slams into us, you'll want to be prudently positioned to ride out the storm and take advantage of the coming pivot from supposed tightening to easing financial conditions that will follow. That's all for this week's SD Bullion Market Update. As always, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.